Good morning, everybody. Hey, welcome to the first Friday, the first day of November of 2019. 2 months away from 2020, the end of a decade and the start of a new decade. So, what do we got to talk about today? We got more earnings. We got some more data coming in from various economic indicators. So we'll talk about those here in just a few minutes. Hang tight, and Dave will join us here in just a moment.
5.7 Light FM. Eddie Money there. Morning, Dave here. It is 8:40 now, 20 before 9. Friday morning is always a big morning. And when it's the first one of the month, the federal government dumps data on us kind of like their shredders all broke. They did that to us this morning. It's unemployment week from the federal government. And boy, got some pretty good news. Let's check downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. And Phillip, you and I were talking before we went on the air. Not only was it a surprise for this month's number as far as jobs created in the month of October, but then they took August and September's numbers and revised them upward with a number that took those two, just the increases together. We wouldn't complain about that in a month by itself.
No, we really wouldn't. I mean, everybody was focused on jobs. Actually, they were even saying, trying to take our eyes off of jobs, saying, hey, we expect jobs to not be real good given, the whole General Motors strike that was going to affect the jobs number. However, it blew the top off of what they expected. My guys thought it would be about 88,000 new jobs, and it came in at 128,000. That's a huge, huge deal right there.
And the sum total of the revisions upward as they look back on August and September, we ended up showing about 100-odd thousand new jobs added that we didn't count in the prior 2 months, which sum total makes this month's report gangbusters. And that's even a conservative description of it.
Yeah, it really is. I mean, between those 2 months, there was 95,000 jobs added in August and September. So you're right. I mean, that was more than what they expected October to be.
Yeah, that's it's almost mind-boggling, and with all the data points that we get that say the economy's doing okay, but nowhere near as fast a growth as we had, and all the things that you and I have been talking about, all of that's probably true, but we're still hiring like a house afire these days.
We are, but let me throw a little caution to the wind here. I always like to dampen your throw a little rainwater on there for you. But one
Yeah.
of the things I saw there was, I mean, unemployment was 3.6%. You can't argue with that. It's still one of the lowest rates in 50 years. But what they did say was that those people that were, quote, discouraged workers and those holding part-time positions for economic reasons, that number edged up 7%.
I was going to say the one disappointment that I saw in the report was that the average work week didn't increase, and our average work week in this country is only 34.4 hours, and it didn't increase. And that does tend to indicate that we're adding a lot of part-time and 30-hour-a-week jobs, right?
Exactly. And so there's still that segment of the jobs market that is, full employment, full-time employment is still not where it needs to be.
There's flies in every ointment. There's always room for improvement. The Democrats wouldn't have any reason to run at all if everything was so hunky-dory in the economy. The other indications that we got, 3% annual wage growth rate. That's holding steady for what they expected and the same as they had last month. And wage growth in the country, our hourly wage average was up 0.2% last month, which is a little lower than they'd like to see it. So we've got a very, very good employment report to start out November, but there are some flies in the ointment.
Well, yeah, and you're right. There's always going to be something there, but I think the pluses definitely outweigh the minuses in this report, given the revisions in August and September.
Absolutely. I total it up where, like I said, gangbusters would be the only description that one could come up with in terms of the improvement in the employment picture. I suppose we've got a whole pile of household names. that are reporting their earnings from the quarter. You were telling me before we went on the air that the misses were there, but boy, when they beat and the beats were there, but boy, when they missed big in some places, didn't they?
They really did. You know, we had some pretty big misses. Let's start out with those. AIG was the first one, the insurance company.
Yeah.
Yeah, big insurance company. They missed by about 44 cents a share, even though revenue did top forecast. So they missed their profit margin. You know, they're better than where they were a year ago, because a year ago, you know, they were kind of in a loss situation overall. But so they're trading down a little bit, down about 2.5% this morning.
Do I remember AIG being one of those big companies that was in really serious financial trouble a few years ago? I don't remember, but I think I remember them on the list of companies that were in danger of going toes up. So just
back in 2008, yes, the government had to step in and buy some of their stock in order to keep them afloat back in 2008. And they're not really the same company they were back then. They have a lot of different branches, and it was the holding company that really got them in trouble back then. But they managed to basically sell off some stuff, pay the government back, and be stronger for it. But not a real good quarter this last quarter.
Yeah, I remembered. I didn't remember that was part of the 2008 crash or not, but I just remember them as one of those companies that I had filed for future reference as being one that came out of a real big hole. Obviously not a good quarter last quarter.
Yeah.
Other indications.
So the other big loser today is Avis, the rent-a-car company. They missed by almost 50, a little less than 50 cents a share. Also, their revenue missed the forecast also, and you know, it's three strikes you're out with them. They lowered their full-year revenue guidance, and so they say they're being impacted by the ride-hailing services like Uber and Lyft is putting pressure on their earnings. They're down 10% this morning.
Whoa, that kind of surprises me just a tinge that a rent-a-car company get hit by the ride-hailing services, but I suppose it's possible. You know, the local rentals and whatnot, when you've got a car on the fritz, you aren't renting a car, just take an Uber anymore, I guess.
Well, and that's true for short-term things. I mean, I thought I was going to do that in Chicago this summer when I was had to go to a business trip. And I used a Lyft to go to one of the towns, and man, when I got that bill, I thought I could have rented a car cheaper than what it took me to get there. So, yeah, you got to be careful.
Surge pricing will get you every time, won't it?
Yeah, I tell you, something else.
Elsewhere on the earnings front, you got some good news to share with me?
We do have some good news out there, Dave. ExxonMobil, they came in about 8 cents ahead of forecast. Revenue was also a beat. They've making some excellent progress on some of their long-term growth strategies. They're up about 0.75% this morning before we get going. Follow that up with the Chinese e-commerce company, Alibaba. Now, I don't have any of the specifics on it other than they beat and they beat. So they beat on top line, they beat on bottom line revenue. They've seen an increase with their mobile users among some other factors, and they're up about 1% this morning.
Wowzers. One thing, I had a chance to do a little homework while we were talking there for a couple of seconds. The biggest loser on my list that caught my eye, you had noticed it too, but neither one of us knew for sure what they do. Arista Networks was suddenly down 28% this morning in pre-market trading. You had some numbers. I did a little snooping. They're a cloud computing company and data handling company. They manufacture and distribute routers and whatnot, and they also do a lot of cloud computing and cloud storage. In other words, kind of in the Amazon, Microsoft, and the other cloud computing world. Evidently, they had a big miss. Did you get their numbers?
Well, they didn't, Dave. Here's the deal. They came in 28 cents above estimates, which is a huge number, right? It's about 10% more than what was expected. Revenue came in above forecast. So you would think, okay, why the big number drop? Well, here's the deal.
I'm waiting for that shoe to drop there somewhere, because you don't drop 28% unless something really bad happened.
Current revenue forecast for the quarter fell well below the estimates, and supposedly the rumor is that they have a sudden business drop with a single customer, and that customer is believed to be Microsoft.
Ah, yeah, you lose Microsoft. That's pretty bad news in the computing business, I'm assuming, right?
Yeah, and it just goes to the whole notion that to have all your eggs in one basket with one customer being one of your bigger, revenue sources can be a detriment to your business model. And I mean, I got Arista down 30% right now, but it's the same way. Let me just kind of make it a little analogy here, because the same thing that happened to them could happen to folks out there in their portfolio. If they have too much in one position and that position gets hit hard, it can rock their portfolio way beyond what they anticipate.
Oh, yeah. I had a few friends that were madly in love with tech about 1999. Their retirement kind of changed after 2000. Too many eggs in one basket can really cream you, can't they?
It really can. It really can. And so, people fall in love with stocks and a certain company, and it can be their demise as well as the upside. So, hey, a couple
And
other companies. We've got
yep.
Newell Brands. Now, I don't recognize that name either, but it's the maker of Sharpie, Papermate, Sunbeam, Mr. Coffee. Who can live without Mr. Coffee, right? So they beat by almost 20 cents a share. Revenue was above estimates. They've been doing some divestiture programs, selling off some pieces, and they're trading up this morning almost 4.5%. Another big loser today in the market is Pinterest. And
Pinterest.
yeah, Pinterest, but here's the deal. They beat, they came in with actually made a penny a share.
What'd they do? Lose Microsoft too?
No, but they were expected to be down. They were expected to lose 4 cents a share. But here's the deal. They're talking about revenue came in below estimates, and they've got a slowing sales growth this quarter, and they've been downgraded by some of the wirehouses, and so they're trading down 21% this morning.
Guidance will get you one way or the other.
Yeah, actually, Dave, they're going to open at a pretty substantial 52-week low by about almost $4 a share below their 52-week low.
That's going to hurt.
Yeah.
Setting the table for this morning. Looks like largely a profit-taking day yesterday. Dow was down by 141. NASDAQ down by 11.5. Standard & Poor's down by 9. Not a monster day, but definitely down. Sounds like we got some good news on the employment and enough good news from the earnings where we can expect some greening today. What does it look like 45 minutes early, Phillip?
Dave, right now, everything's coming up roses across the board. We've seen since the jobs number came out and all those revisions, we've seen a major tick up in the futures. Everything's up almost a half a point. The Dow's up 115. The S&P 500 is up almost 13 points. The Nasdaq's up almost 35 points. So good news all the way around when it comes to the stock indexes. Now the commodities indexes, they're reacting kind of the opposite direction. We've got gold and silver down gold's down about 0.5%. Silver's down about 0.25%. We've got crude oil going the wrong direction today, Dave, up 1.3% to $54.91 a barrel.
Well, poop. World markets overseas. Asia was mixed at the close early this morning. Europe generally happy what they're hearing from our side of the pond, so they're all trading in green ink midway through their day. Phillip, somebody needs advice to make some money off of these record markets and protect it against the eventual drops. How do I make an appointment with you on the phone?
Dave, give us a call at 382-0037 to schedule your financial x-ray to make sure you don't have too much risk in your portfolio. Let us x-ray through it and determine what that number is for you. And then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here on Monday morning with a look at what happened to our money over the weekend. It's normally a quiet time. These days it's not with electronic trading, is it?
No, it's really not. So, hey, you have a great weekend, and I look forward to speaking to you again on Monday.
Be well, my friend, and go Knowles. I know you're playing Miami, so you're probably going to be paying close attention on Saturday, aren't you?
I wish. Well, I will. I'll be sitting in a wedding, so it's going to be kind of okay. Pull the phone out and check the score periodically. It's going to be hard to watch it though.
You'll admit that in public. You'll do that, huh?
Yeah, yeah. You know.
See you Monday, Phillip. Be well.
All right, buddy. Thanks.
It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Of all the
Folks, I want to thank you for joining us today. Hey, I hope you have a great weekend. Thanks for watching, tuning in. If you like what we're doing, please like our page, Statler Financial Services. Share this with your friends and neighbors. Have a great weekend. I look forward to speaking to you again on Monday.